In today's shifting world, if you don't take the responsibility of learning how to invest your hard-earned money for yourself, you will have to rely on other people to grow your money, and they will reap most, if not all, the rewards. Hey there, my name is Kundai, and I will be your instructor in this ultimate cryptocurrency trading course. You and me are going to learn how to become a cryptocurrency trader and investor. Together, we will use a platform called TradingView to perform technical analysis and go through candlestick patterns that will help you to determine trend changes as well as entry and exit price points. During this course, we'll go through what a cryptocurrency is and how it can be traded. This will give you a really good idea of how you can start investing in cryptocurrencies such as Bitcoin and Ethereum for yourself and potentially grow substantial wealth. Now, this course is aimed at complete beginners, so there is no need to have any experience in trading cryptocurrencies. You don't even need to know any trading jargon or terms. We're going to start right at the beginning and work our way through step by step. First, we will go over the differences between a stock and a cryptocurrency. We will look at how both can be traded in the real world and start learning about technical analysis. I will show you how to use TradingView, a charting tool that we will be using to perform all of our technical analysis. Then we will learn how to read candlesticks on a chart. I will go over all of the essential technical indicators that are necessary to execute good and profitable trades. These include moving averages, relative strength index known as RSI, and moving average convergence divergence known as MACD. We will even make use of these technical indicators within various trading strategies that you will learn. An important part of maximizing your trading strategies will involve technical analysis, risk management, and being able to utilize charting platforms such as TradingView. This is why I'll be teaching you how to do it all, to help boost your chances of making good and profitable trades. By the end of this course, you will have a solid grasp of how to perform technical analysis on any cryptocurrency chart. You will have the confidence in executing good and profitable trades. This class will kickstart or enhance your trading skills to the next level. Our cryptocurrency trading course has been featured in famous and reputable websites such as IGN and Mashable. Here are a few reviews from the many positive reviews that we have received. Tan Bron really gave me a good insight into the strategies for trading and how I could start my journey as a beginner trader. Much appreciated. Mike McLean, most enjoyable cryptocurrency trading learning experience. Have bought several crypto courses, and this one from Kundai is up there with the best of them. If you're looking for an easy intro to becoming a profitable trader, look no further. Highly recommended. Julep Fernandez, well taught and clear course. Highly recommend it. Joe Boca, great course and instructor. Would very much recommend. Chris, nice and easy to follow for a complete beginner like me. Enjoying the content so far. Smiley face. Joanne Plamondon, great beginner content, clearly explained and easily understandable. Lang Sabali, it's more than expected, an eye-opener. Do you need more information? If so, have a look at the curriculum under this video. And if you watch this video to the end, you will be given the option to preview some of the lessons included in this course. For those of you that are ready to upgrade yourself and go from a beginner to a confident cryptocurrency trader, enroll now and I will see you in class. Hi, it's Kundai from PiggiBacks. I hope you're well. In this lecture, roughly in the first 5 minutes, I will talk to you guys, letting you know how you can determine bad and good characteristics of cryptocurrencies or stocks. Then we will jump onto the chart and start learning how you can read candlesticks the correct way. Right, so let's get right into it. So you guys know that cryptocurrencies are quite volatile. However, if you look at them the way you look at people, or okay, let's say friends or your friends, for example, you know how people have different personalities? Well, cryptocurrencies are like that. They are similar. They have different, personalities per se. So some of them will be, very predictable and orderly, so sometimes you've got those friends that are reliable, their next day move, what they're gonna do the whole week, because they're quite consistent. They don't just jump around all over the place. They're quite organized, they move accordingly. And then you will have other friends that are quite quiet and they don't do much. They just stay in their own lane, and then once in a while you do see them pop up. Some cryptocurrencies are like that. Some cryptocurrencies will not move very volatile, but then once in a while you will see a big boom, and then all of a sudden they'll be quite volatile. If I was to give you an example of a cryptocurrency that has quite a nice personality in the cryptocurrency market, that would be something like Bitcoin or Ethereum, because those two are cryptocurrencies that are not as volatile as the rest of the cryptocurrencies. And that is also because Bitcoin is the market leader. So most times when Bitcoin moves, the rest of the market follows Bitcoin. And when the rest of the market follows Bitcoin, they move twice as much, some coins 3 times as much, 4 times as much, 5 times as much going on. And you'll get some cryptocurrencies that are quite mild and typically move in small prices. Those, you don't want to waste your time on those. In contrast, you've got some people that are quite moody, and you never know from one day to the next which frame of mind they're going to be in. You don't want to be trading those type of cryptocurrencies. However, cryptocurrencies behave in a wild and crazy pattern are just like friends who act in a similar manner. You can't count on them. So yeah, sometimes they, those type of friends can be fun to spend with for a few hours, but if you spend too much time with them, they'll drive you bonkers. They'll drive you nuts. So I would say look at it as if you're a psychologist. So the cryptocurrency is your patient and you're the doctor, whose job is to analyze the cryptocurrency's good points and trouble causing characteristics. So you're now analyzing these different cryptocurrency coins, and when you learn to look at a chart with a trained, discerning eye, it won't take long before you're able to judge the risk and reward for any cryptocurrency, making it very possible for you to make large profits on any cryptocurrency of your choice. So that means that if you're able to pick out cryptocurrencies that have good characteristics, you'll be able to monitor and trade with low risk but high reward setups. Our goal is to take consistent profits out of the market. So it is important to make sure that you're picking orderly, more predictable cryptocurrencies, because they will make you profits. Whereas if you pick disorderly cryptocurrencies that are unpredictable, playing an erratic cryptocurrency that skyrockets increases your risk and greatly diminishes the odds of a reward, and that's what would be called gambling. So no thanks to that. And the same applies to stocks. As technical analysis traders, we trade according to probability and risk to reward setups. So talking about charting essentials, as technical analysts, we mainly use 3 types of charts, which are line charts, bar charts, and candlestick charts. And personally, I use candlesticks, and I recommend that you guys use candlesticks as well. And I'm going to be going through candlesticks on the TradingView platform. So if you are on your TradingView profile, if you select candles, you can see that they're bar charts, candlesticks, halo candles, etc. And personally, I use candles, so you just select candles. Looking at candlesticks, we have to thank a legendary 17th century Japanese rice broker who was named M. Homer. You can Google search him if you want to know his storyline, but he was basically one of the first Japanese traders to use price history to predict price future, and he made a fortune, huge fortune, and is known to have made 100 consecutive winning trades, and his trading theories and principles have now evolved into candlestick charting techniques that we use today. So a great thanks to him. So right now what you're looking at on my screen is a BTC USD chart, and this is on a 3-day timeline or time frame. So all these candlesticks represent 3 days, and the first thing that you'll probably realize is that every time the candlestick is red, it's going down, and every time it's green, it's going up. Red, down, green, up, red, down, green, up, red, down, green, up. So that is basically that's one of the first things that you'll recognize when you're trying to read candlesticks, is that red is for down and green is for up. And red means that the price is moving downwards, and green means that the price is moving upwards. This is important to grasp because it helps in reading candlesticks. Right, so I'll be showing you guys how to read the formation of candlesticks. So I have drawn the last 5 candlesticks. So if you look where my mouse is, can you see the last 5 candlesticks on this 3-day chart? So 1, 2, 3, 4, 5. I've literally just drawn these last 5 candlesticks right here. So we're going to look at these last 5 candlesticks, and I'm going to teach you how you can read them. So the first thing that you'll probably notice is that, okay, well, why is there no, bits poking out of the candlesticks that I've drawn? Well, the explanation for that is because those bits that are poking out are called wicks, and the way a wick is formed is due to price movement. So these candles that I've drawn so far, they're only showing you the open and the close. So if you recall, I told you that when you're reading candlesticks, red is price movement going downwards and green is price movement going upwards. This helps you read candlesticks because anytime a candlestick is red, you have to read it from up going down. I'm just going to label this. So this right here is the open, and the bottom right here is the close. So when you're reading a red candlestick, the open is always at the top and the close is always at the bottom. Now, to explain the wick, when you're reading candlesticks, what I've drawn right now is called a body. So candlesticks can either have wicks or have no wicks. The wicks represent the price movement whereby price has moved above the open or below the close. So in this example, this is a red candle. So because the first candle right here on this chart that we've drawn, because we've drawn the last 5 candles, which is 1, 2, 3, 4, 5. So this is the first one. This candle here has wicks because price moved upwards like this and then hit a top, and then it moved down again. Hit a bottom and it moved up again. So now to label this, when the price opened, the candle would be like this. So the price opened and the price could have moved either way. It could have gone down first or it could have gone up first. We don't know because we were not watching the candle. However, if you're watching the candle, you actually see the candle either go down or upwards. So right now we're just using an example of the price going upwards first. So if the price had gone upwards first, the candle would open. So after a 3-day period is done, when this candle opened, it would open, and we're assuming that it moved upwards first. So it would have moved up first, and then it will hit a high. As soon as it hit that high, a wick would be formed. So as the price has moved up, a high has been formed. So we've labeled this high. This is the highest price that this 3-day candle has hit so far. And then what happened now is that the price moved downwards. And when the price has moved up like this candle would turn green. If you were watching it, this would be a green candle because it's gone from its open upwards to a high. It's gone above its open. It opened at a specific price and it's gone higher than the open price. This candle would turn green. So this candle would now start going down and a wick would be formed until it gets to its open price right here. That's when the candle would start turning red. As soon as the candle goes below its open price, it will turn red to show that price is moving downwards. So this time it's gone red and reach a low. Once it reaches its low, we can see that looking at this candlestick, the price moved up and closed right here. That is the candle that we've got right here. This is the first candle. And to label the bottom, this would be the low. The low is the lowest price point that the candle reached. So can you see how it is important to be able to determine whether a candle is red or green, and that will help you in reading your chart. So a red candle, the open is at the top of the body, the close is at the bottom of the body, the low always remains at the bottom of the wick, and the high always remains at the top of the wick. The high is the highest price that the candle had, so that's the highest price that the market moved within 3 days, within that 3-day period. This is the opening price within that 3-day period. This is the closing price within that 3-day period, and this is the lowest price within that 3-day period. So looking at this exact candlestick, we can see that this candlestick opened at $9,291. If you look up here, right at the top, you see an O, H, L, C. The O represents the open, the H represents the high, the L represents the low, and C represents close. So instead of you trying to figure out where exactly the price is by looking at the price on the right hand side here where my mouse is right now, you can just hover your mouse onto the candle and the data is represented right at the top where there's O, H, L, and C. So we can see that this candlestick, the high was $9,351.17. The open was $9,291. The close was $9,233.10. And the low was $9,153.43. So that is how you read this candle. Now we're going to take a look at how you can read the green candles. So I'm just going to move these candlesticks to the right so that I'm actually able to label them. Okay, so when you're reading green candlesticks, you read them from the bottom going up to the top. So with this green candle, the first one that we've got that I've drawn out right here, the bottom part of the body would be the open and the top part of the body would be the close. This is because green candles are read from bottom going upwards. So we're just going to label these. Right, so now that we've labeled our candle, we're going to look at the movement of this specific candle. Remember, this candle right here where my mouse is representing the first green candle from the 5 last candles on this 3-day chart. If I quickly label this actually, just so that we're crystal clear on which candlestick that we're looking at. So the arrow is pointing at the representative of this candle. So this candle right here is representing this candle. So when this candle opened, during this 3-day chart, it would have opened down here, right here. This would have been the open, and when it opened, it would have gone either up or down. We don't know because we were not actually watching the chart. Could have gone either way. It doesn't actually matter which way it went, because what we just end up wanting to know is how the candle was formed and the information that the candle actually gives us. However, if you're watching the candle, you'll be able to see which way it went, whether it went up first or down first. So because when we did the red candlestick, we gave an example of it going upwards first. With the green candlestick, we'll give an example of it going downwards first. So right now we're going to assume that when this green candle opened, it first went downwards. So if this candle first went downwards, it would have started going down and it will be a red candle. If you were watching this candle live, it would have gone down and it would have been a red candle, and then it would hit a low. So once it hits its low right here, the candle would now start moving up, and once it starts moving up, a wick would be formed. Right now the candle goes back to its open price, and as soon as it surpasses its open price, it will become a green candle. So this candle would turn green if you're watching it live, and then it would start going upwards, and once it goes up, it would hit a top. And we can see that when this candle hit its top, it slightly retraced and came back down to close just slightly below the top, and the wick is not that long. It didn't go too low. So this is how our candle looks like. So to finish off labeling the candle, we know that this is the top and this is the low. So now that we've labeled out our candle, we can see that the low is the bottom of this wick and the high is the top of this wick. So this candle opened at the bottom of the body right here, and then it closed at the top of the body right here. The high was at the top of the wick right here, and the low was at the bottom of the wick right here. So if we're to actually look at the amounts, all we have to do is hover our mouse onto that exact same candle, and we will be able to input the data or see the data or the price points of this candle. So we have an opening price of $9,134.44, a low price of $9,073.53, a high price of $9,243.36, and a close of $9,211.99. So I'm just going to input these onto our labels. Okay, so now that I've labeled this candle, we're going to go through the picture that is drawn by this candle once again. So we can see that the lowest price that this candle hit in this 3-day period was $9,073.53. It opened at $9,134.44, and it went to a highest price of $9,243.36, and it closed at a price of $9,211.99. So because this candle closed higher than its open, it is a green candle, and you'd read it from bottom going up to the top. Whereas the red candle that we went through the first time had an opening price of $9,291, and it went up to hit a high price of $9,351.17, and then it went down to hit a low price of $9,153.48, and then it went up to close at $9,233.10. Since this candle closed lower than its opening price, it is a red candle, and you would read it from top going down to the bottom. Right, so I have separated the candlesticks that I drew here so that we can label them together. I've also covered the ones that we went through together, so I've labeled these with arrows so that you're able to differentiate between which candlesticks we're referring to, so that it's just easy on the eye. So the first candle that we went through from the last 5 that we're focusing on up here, the one with the yellow arrow is represented by this large one with the yellow arrow. The second red candle has a purple arrow going up, is representing the purple arrow going up pointing at the red candle on the actual chart, and the blue arrow pointing at the green candlestick is represented by the one I drew with the blue arrow pointing at it. Last one that I've put an arrow on is the orange one, which is representing an orange arrow pointing at the candlestick. So I've also covered up the ones that I labeled for you guys when I was showing you guys how to read candlesticks. So what we're going to do now is we're going to go through the first red candle with the purple arrow on it and label it together. So we will start from top going bottom. What do you guys think is the name of the label that I'm pointing at right now? So if you guys named this label the high, you're correct. So this is the high, which represents the highest price that the candlestick would have hit or reached. What label do you guys think is represented right here where my arrow is pointing right now? If you guys labeled this as the open, you're correct. This is the opening price of this candlestick. So what would be the label for this one right here where my arrow is now? So this would be the close. If you guys named it correctly, well done. And if you didn't, don't worry. All you just have to do is go through this lecture again, and within time it'll be encrypted in your head. And the last label, what would you guys name this label right here where my mouse is right now? So this one is the low, which represents the lowest price that this candlestick hit. So we're going to label the green candle that has an orange arrow on it now. So since we labeled this one from top going down, we're going to label this one from bottom going up. So where my arrow is right now, what would you guys name this label right here? If you guys say the low, you're correct. This is the lowest price point that this candle hit or reached. So moving up, what would you name this label right here? If you guys said this is the open, you're correct. This is the opening price of the candle. This is where the price started when this candlestick opened. Moving on, what would you name the label right here where my mouse is? If you named this the close, you're correct. This is the price point where this candlestick closed at. And the last label at the top, what would you name this label right here? This is the high, and it represents the highest price point that this candlestick hit or reached. So as you guys know, these candlesticks represent a 3-day candle. So these price points are the highest that this candle reached within a 3-day period. The closing price point within a 3-day period, the opening price point within a 3-day period, and the lowest price point within a 3-day period. Same applies to the red candle. This is the highest point within a 3-day period that this candlestick reached in terms of price. This was the opening price point within a 3-day period. This was the closing price point within a 3-day period, and this was the lowest price point within a 3-day period. So we're just going to now look at labeling the actual pricing or the actual price points. So if we scroll right to our candlestick, which has the purple arrow, we will see that we have the OHLC at the top. That's where we'll find our price points. Just to show you that these figures change when you move your mouse. So you can see if I move my mouse to the left, it's now showing me the open, the high, the low, and the close for the yellow arrow candlestick, the candlestick that has the yellow arrow pointing at it. And then when I move it to the right, which is the purple one, which is the one that we actually labeled together, and the one that I'm just about to put the price points in, this candlestick is being represented now at the top. The data is up there. The open is $9,234.19. The high is $9,282.08. The low is $9,026.51, and the close is $9,132.87. So now that we've labeled the red candlestick with the purple arrow pointing at it, we're going to label the green candlestick with the orange arrow pointing at it. So I'm just going to hover my mouse right over it so that we can start labeling it. So we can see that we have an opening price of $9,213.15, a high price of $9,573, a low price of $9,132.87, $128.21 and a close of $9,539.51. Okay, so I have now labeled the green candle with the orange arrow pointing at it, and we have all our labels in. So I'll just uncover the ones that I went through with you guys earlier when I was actually showing you guys how to read the formulation of these candles. Just clean it up a little bit. Okay, so we've got all our labels for 4 candles. The last candle is not labeled. That's because at the moment that candle is live. So if you look at the price has been going up and down. If you've already noticed, whilst I was doing this tutorial, the price has been going up and down. So this candle has been changing. This candle wasn't this tall before. It was roughly about this tall, and then it went up, it went down a little bit, and then it went up. It didn't go into the red though. It was always in the green. So the price, from when I started making this tutorial, the price has been on an upward trend. Right, so we've got our candlesticks and they've all been labeled, and I would suggest that you guys really grasp how to read these candlesticks, because it'll be very important and useful for the upcoming lessons. So just to recap, red candlesticks, you read them from top going down to the bottom, and green candlesticks, you read them from bottom going up to the top. And the red candlestick has an open at the top of the body and a close at the bottom of the body, and the green candlestick has an open at the bottom of the body and has a close at the top of the body. The high and the low are always at the same place. The high is always at the top, or the price point that was at the highest point. The low is always at the bottom, which is the lowest point. And one final thing that I need to show you guys is that you can get a candle with no wicks, and I'm going to give an example with this last candle. So if you were to get a candle with no wicks, let's say the candle is green like this one and it's got no wicks, how do you think this candle would be labeled? So we're given an example of a green candle and it's got no wicks, it's just got a body. How do you guys think that this will be labeled? If you said that the bottom of the body would be the open, you're correct. And if you said that the bottom of the body would be the low, you're also correct. So any candle that has no wicks, that is green. The bottom of the body is the open, and it is also the low, because it is the price point whereby the candlestick opened, and it also is the price point whereby the candle hit its lowest price. So the top of the body would be the close, and it would also be the high. This is because the top of the body would be the highest point that the price reached, and it is also the point whereby the price closed. I'm just gonna label these out for you now, and then we'll go through a red candle. Right, so I've actually labeled these 2 candlesticks with no wicks. So as you can see, the bottom part of a green candle with no wick is both the open and the low, and the top part of the body of a green candle is both the close and the high. Looking at the red candle with no wick, the bottom of the body is both the close and the low, and the top part of the body is both the open and the high. So I hope that this video has helped you to understand the essential basic principles that are important when reading a candlestick chart. For those of you that are ready to upgrade yourself and go from a beginner to a confident cryptocurrency trader, enroll now and I will see you in class.